Welcome back to Media Week. Well, the federal court has ruled that radio simulcasts online are not covered by existing music licences. So what does this mean for radio broadcasters? Are they going to face higher costs when it comes to those music rights? And how will this change their digital strategies? Well, let's return to James Manning, editor and publisher of Mediaweek. James, what does this ruling mean?
Yeah, well, it's been in the courts for a little while, this. The commercial radio licence holders were arguing, look, our existing music licences should cover material simulcast on the internet. I think that's basically why if you ever download a podcast of a show on an FM station, there's no music in it. So they just edit out the music and you just get the audio bits of the program, because it's not a simulcast if you're downloading the podcast. So they finally, the music people have had music companies, their representatives have had a ruling saying, no, look, you need to get a separate licence for what you're broadcasting online. So yeah, it was a good call about the strategies for what stations are doing online. Because at the moment they're getting very little revenue, most players, off pumping out all their music online. So we could well see some of that dry up. Commercial Radio Australia have sort of said, look, we're going to review our options, whether they are able to launch some sort of appeal against this. We're yet to find out, but that if they have, you think they'd probably take that option, because they've already had a few rulings in their favour, apart from this one in the federal court which went against them.
Okay, so you couldn't see them being prepared to, pay more for
well, they might have
rights.
to, but how much more? That's the music players said, look, we'll work with commercial radio to reach a sort of an acceptable sort of middle ground, if you like. But radio people are just going to be saying no at this stage anyway. Look, we really can't afford to be paying more money for this music. All right, and they're using all sorts of arguments from, look, we help promote these acts to,
Yeah, okay, we'll watch this space. Interesting, DMG Radio launching Smooth FM as a national brand. What's this going to mean?
It's quite still a new brand, isn't it? Remember on the show last year we covered a fair bit the launch of the stations in Sydney and Melbourne. Well, as of today, the Thursday, it's gone out in Brisbane, Adelaide and Perth as well, on digital radio, also online. So whether it's another thing they'll have to work out if they've got to pay more for those songs they're playing. So yeah, so it's become, certainly for advertisers, it's become a bit more of an interesting proposition. How many people are listening to digital radio? It's not as huge, of course, as the analogue radio, but that is a growing audience.
Yeah, and I mean, you've been talking about, obviously, about how well it's been doing in terms of growing ratings.
For it's still less than a year old, and it's really created some cut through in its key demographics, and it's really for people wanting to reach that sort of older audience, slightly skewed to women, but getting both sexes, sort of 40 plus, 25 plus, it's somewhere in that market. You've certainly got to consider it on your schedules.
Just turning to Ray Hadley, what happened? So there was a feud with management. He was taken off air, suspended, but now he's back.
He never actually got taken off air. He was sort of told he would be taken off air, but we believe that John Singleton, the major shareholder in Macquarie Radio, stepped in and said, no, look, I don't think it's a good idea to take one of our key assets off air. And you've got to think, it would be sort of a bad move. You wouldn't want to get Ray Hadley. Alan Jones is the other big asset. And those two names really turned 2GB from a sort of cellar dweller in the ratings, if you like, into a major player, number one station in Sydney. And to damage either of those brands by taking them off air for some time, it wouldn't be a good look. So you've got to think they're going to try and work it out behind the scenes.
Any idea what it was about?
Oh yeah, it was the way Ray Hadley talked to some of the staff, I think, who weren't working on his program, just some internal row. I'm not sure exactly what it was over, but yeah.
All right, let's just turn also to what's been going on at 10 now that we are in survey period. Looking at the future of James Warburton, there's been a little bit written about his future in
yeah, look, he's now into his second year running the network, so your first year you're given some latitude with the results, if you like. So it certainly wasn't a great year for 10 last year. James himself is well aware of that. He knows he's under a bit of pressure now into the second year. He'd be wanting to see some results on the board. As we speak today, we're only day 5 of the official survey, so it's probably a bit premature to come out and say, look, the year's not looking good for 10, but they could have had a better week. How that will play out, I think you've really got to wait a few more weeks. and James Warburton Future, yeah, it will definitely be sort of linked to the performance of probably the station in this, but at least the first quarter, maybe the first half of the year. So I think it's probably too early to call yet what's going to happen.
We'll come back to TV ratings in just a moment, but just quickly looking at the publishing industry, and there's been a real fight over real estate ads in Victoria. What's happened? Who's involved?
Yeah, it's involved the Geelong Advertiser and the Weekly Review. And the Weekly Review is started as sort of an independent suburban newspaper group. Fairfax had bought a 50% share, so they had a contract with a real estate agent in Geelong, and they're saying this real estate agent has reneged on his contract, not because when you sign a contract you agree to spend so much money over a certain period of time, whether it be a year, 2 years. They're saying, look, he's not spending his money, half of it's going to the Geelong Advertiser, which is their competition in that market, and so there's a bit of an argy-bargy in the court over that, so we've got to see how that plays out.
All right, let's move on to the TV ratings. Now, this is for week 6. Free-to-air top 10 first, and James, My Kitchen Rules there dominates the top 5. Yeah,
look, fantastic. They're the numbers for last week, and 3 of those 4 shows did over 2 million people, so it's fantastic success again this year. It's their best week ever of the show in 4 years. So.
And, you know, some other shows not doing too badly either, Packed to the Rafters and Revenge for 7.
Yeah, look, absolutely. 7 has really started so strongly out of the gate. It's just fantastic.
And Elementary for 10, though, in the top 10?
Yeah, well, there you go. That's their Sunday night program. Doing very well. It's been on twice now. The audience has returned. So, yeah, it's one of the bright spots for 10 for sure.
And looking at subscription TV for week 6, Selling Houses Australia, such a strong brand.
Yeah, it was the best start ever that show's had in I think it's Series 7, but it's been going for a long time now in massive numbers. And actually the second most watched show on subscription TV so far this year.
And just turning the page, and the Super Bowl there, as we talked about last week, featuring. All right, let's just ask you about a couple of other stories quickly, and that battle of the current affairs shows. We've seen the New Look Today Tonight. How's it been going?
Yeah, look, pretty good. I'm looking at 3 nights of survey figures so far with the New Look Today Tonight. They've had one out-and-out win, but the current affairs sort of had the edge in on 2 nights out of those 3. So it's a real battle that's going to be fought over most of this year, I think, before we can really identify a winner. They're both neck and neck. They have been neck and neck for a while. We're really looking at East Coast because Today Tonight dominates Adelaide and Perth, but they're smaller markets. Advertisers really want to hear you tell them you're winning in the East Coast markets.
All right, James, we're going to have to leave it there. Thank you so much for that,
Brody.
James Manning from Mediaweek. Well, just time for a check on some of the results out of the media sector in earnings season this week. Here's Evan Lucas from IG.
Yesterday saw carsales.com.au report their first half line figures, and looking at the headlines, they were pretty reasonable. Earnings were a little bit low, unfortunately. They were down at 53.9 million. Most expected that to come in around about 54.9. Net profit, however, was on the upside. It came in at 37.6 million Australian dollars versus 37.1. It was a fairly inline result. It was what we were sort of expecting. However, what we did see on that online advertising sales increased by 16.4%, pretty strong there to $89.6 million. Management also reconfirmed their guidance for FY13. They expect NPAT to come in around the sort of 82.1 million. They see really robust growth in the non-car classified, so trucks, caravans, camping, and they also expect their new venture, which is quicksales.com.au, to pick up any sort of revenue slack. All in all, okay result on the short term. Long term, looking a little bit more rosy. Moving to SW Communications Group, very solid result from these guys considering how weak the advertising space has been over the last sort of 12 months. NPAT grew at 6.5% at $44 million, very in line with expectations. However, investors should be even more impressed with the fact that they're offering a 6.6 yield. It shows that STW is really holding its own in that sort of very, very constrained advertising space. Management has offered a very strong guidance for FY13, expecting about 15% growth, NPAT to come in that sort of range, mid to single digit growth with regards to the EPS line, and it therefore means that sort of STW are well and truly in line to take advantage of the cyclical nature of that media space.
Yeah, and plenty more reports for next week's show. That's all we have time for now, though, from the team here. Thanks for your company.